Ladies and gentlemen, a few days ago, I told you about a fractal that I have identified on the Bitcoin chart. I guaranteed you at the time of that video that you had never seen it before, and everyone kind of agreed with me. They'd never seen it before, and it seems like it's actually working very, very, very well. So we need to discuss that fractal today. We also need to look into the short-term price action. There is a bit of a short-term roadblock here on Bitcoin, also on Ethereum and the altcoin market. So the whole market collectively is facing short-term resistance. And then we also, of course, as we usually do, need to discuss the overall macro resistance at about 124,000. That is a level Bitcoin absolutely needs to conquer in order for the market to enter its parabolic state. I know I keep saying this, but in tomorrow's video, I will discuss the global M2. Lots of stuff just keeps coming up, and I don't want to complicate the topics too much. So guys, before we get into it, please check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. I'm going to start out with the fractal. I'll get into the short-term price action afterwards, and then I'll end off with the macro analysis that is absolutely fundamental, but I feel like a lot of you guys have heard me say it by now. I just feel the need to repeat it every video in case you haven't, because I know a lot of YouTubers out there, a lot of Twitter analysts actually just don't know what they're talking about. And I feel like a lot of new viewers to the channel can really get value out of that information that they probably haven't heard before. Unfortunately, guys, I don't know if you know this, you probably do. I'm being sarcastic there. Most influencers, most traders on the internet, on YouTube, actually have no idea what they're talking about. And guess what? They make all their money from referral commission and affiliate links. They don't make money actually trading. It's very easy to tell them apart as an experienced trader because they don't even look at the bare bones, which is the macro analysis. But I want to get into this first. This is something I found out the other day, and I mentioned on the YouTube channel, and it was incredibly useful. In fact, it seems like it's working. It's a fractal. So a lot of people know about this line that goes right back from 2017, even Twitter analysts who don't know what they're talking about because they'll just repost it. But as you can see, okay, that's the final jab at Twitter analysts, by the way. Okay, so you can see it goes right back from 2017. It cuts across the 2021 all-time highs. It cuts across the price action here in late last year and early this year. And what we can see is that it looks like we've gotten above this line. We held above it for a couple of weeks there. We dropped back down below it. We tested it for resistance. We've broken back above it. We flipped it again, and now we're bouncing. Now that looks like just regular price action from a very long-term line, but actually, it's strikingly similar to what we've seen before. It looks pretty much identical in so many ways to what we saw back here. We had a line of support coming backwards from this retest back in March 2024, cutting across the price action, looking something like this. And if we just isolate this period of price action right here, what do we see? Well, we see a descending channel formation, okay? That resistance line was formed with a descending channel formation. We broke above that resistance line. We flipped it for support for a period of time. We dropped down below it. We saw a rounding bottom formation. We got back above it. We retested it for support, and then we went to the upside, okay? That is extremely similar in structure to what we're seeing right now, just on a larger time frame. So similar, in fact, that if we go to the 4-hourly chart on Bitcoin, let's make it the 6-hourly chart just to get these candles really stretched out. We go to the 6-hourly chart on Bitcoin, we see literally what I just described. Okay, we see that descending channel formation here on the daily chart. We see that descending channel formation here on the 6-hourly chart. We see getting above that resistance line, flipping it for support, getting above that resistance line, okay, flipping it for support, dropping below it, rounding bottom, dropping below it, same thing, rounding bottom, got back above it, flipped it for support again, got back above it, flipped it for support again, okay? And after a brief period of consolidation of support, skyrocketing back to the upside. That seems to be what we are doing right now, okay? Now, I've made a mess of this chart with all these pink lines. Let me clean that up. But if this fractal is playing out, which it seems very much like it is, that flip of support we saw there should have been pretty much the bottom, and we should be moving upwards from here. Now, that's all well and good. Unfortunately, the thing with fractals is that we can't really validate them. We just have to see how it goes. Essentially, there's nothing else we can do. We can just basically say, oh yeah, that looks similar. Okay, cool. Maybe it's playing out again, and then hope it does. And that's where we get into the short-term analysis. I just want to conclude by saying, although that fractal does look great, again, it is just a fractal, and fractal analysis is notoriously quite difficult to trust because, as I said, you just kind of have to hope for the best. There's not really anything else you can do. And also when it comes to fractal analysis, this fractal could be perfectly valid, but that doesn't mean it needs to keep going. Maybe the part of the fractal that mattered was the part we've already seen, and now we're just identifying it slightly too late, and it breaks here, right? That's also a thing that could happen, and that wouldn't mean the fractal was wrong. It just means the fractal obviously cannot keep playing out forever, because if the fractal kept carrying on forever and ever and ever, we just copy the price action exponentially from the past, and that's not how price action works, right? You need to form new patterns and new structures. But overall, it's undeniably a good sign that we have a fractal like that, suggesting we moved to the upside. Here's where we get into the short-term analysis, right? First and foremost, we know Bitcoin's in a macro upwards trend. We know Bitcoin has its 4-year cycle. We know that as per the 4-year cycle, we have, potentially many, many moons left in this bull market. About 2.5 months left in this bull market. The 4-year cycle suggests a top around mid to late October. It could be give or take a few weeks there. Could be late September, could be early November. We don't exactly know when it will be. We know it will be around that period of time. But what we do know is that in that it will be around October, we probably have a bit more time left. That's another thing supporting that fractal. And so knowing that we probably have a bit more time left, we probably have another all-time high to make on Bitcoin. We can kind of look at any short-term bearishness as a little bit irrelevant unless it's actually validated by a breakdown. Now, we'll discuss what a valid breakdown and invalidation of the bull market will look like in a second, but I do want to discuss the short-term weakness first. It does look like we have a little bit of weakness here in the short term. We have a kind of level of local resistance in red between around 120,000 and 118,500. We're testing that resistance zone right now within a potential ascending wedge formation with potential bearish divergence on the hourly chart RSI. So a lot of things are lining up here to say that Bitcoin is a little bit exhausted and it could pull back downwards. This is not just Bitcoin isolated. Looking at Ethereum as well, we don't really have much price action, by the way, on Ethereum because we're in kind of a local price discovery, but we do have what looks like a potential head and shoulders forming here on a local level. And on the total cryptocurrency market cap, we're actually testing all-time highs that we formed back a few weeks ago. Testing those levels again, that could be a local double top or something like that. So we are in a bit of a danger zone on a local level across the market. If we do see pullbacks over the next few days, it's not something to be alarmed by. And given the macro bullish context, yeah, it's especially not something to be alarmed by. But I'll tell you what, we can't just say, oh, it's irrelevant, we shouldn't worry about it. We have to actually know when it becomes relevant, when it becomes a warning sign. Obviously, dropping downwards a little bit is not a problem, but if you drop downwards too much, you break down below the bullish structures, and you potentially even flip into bearish market environment, right? So in my view, it's very clear to me, personally, that the level that really matters is between about 109,000 and 110,000 from a structural perspective, because that is the level we recently formed as a neckline of resistance, and hence we'd be using that level as a neckline of support now. That is also a level where the volume profile, which is basically an indicator that measures where historical buying and selling has taken place, the volume profile really starts picking up below that level, and so that level kind of identifies or marks itself as a period of time in which, or a price range, I should say, in which the buyers start really reacting, right? That's a very strong trampoline zone, and losing it would be pretty detrimental, especially this late in the cycle. So short-term weakness across the markets, hopefully we can just power through it. And if we do, that would be great. And that would be typical of a bull market. If we do reject though, if we do pull back for a little bit, not really the end of the world. Yeah, it would put a dent in the fractal, but as I said, fractal analysis only takes you so far. It's just a good sign. So short-term pullback is definitely on the table here. Don't be overly reactive if it does occur. Another thing worth considering is that even though these structures are looking bearish on a local level, if you actually zoom out a little bit, what is this? Well, it's a neckline of resistance with a rounding bottom formation. That actually could be quite bullish. And if we do see a pullback, it could actually form what we call a cup and handle formation, which is a bullish kind of pullback before another breakout. So it's not really the end of the world in my view. In terms of when absolute peak bullishness will return to the market, Bitcoin really has a very big level to conquer at 124,000. That's our all-time high on Bitcoin, but it's also a level coming from this chart right here. It's a logarithmic regression channel. I brush through it on this YouTube channel very quickly in every video, but I want to take a little bit more time here, just really so you understand it. It's basically a channel where we measure the angle of ascension from tops to tops and bottoms to bottoms. And what we've identified is that each cycle, that angle of ascension between cycles halves on both the upside and of a downside. So 30, 15, 7.5, 28, 14, 7, something like that. Okay, and if that trend continues, we extrapolate it forward, we can see we have resistance, which has been tested a few times now in the last year at around 124,000. That $124,000 level is cross-validated by the power law chart. The power law chart also having resistance at 124,000, which we've tested multiple times over the last year. It's actually moved upwards to about 125,000 now. So I should probably update that number. It's about 125,000 as we speak. Obviously, both these levels are climbing slowly. So realistically, for Bitcoin to be back in the clear for a next big move on Bitcoin, 124,000 is what we're looking for. 125,000, I should say, is what we're looking for. If that level breaks, we get that big move on Bitcoin. But right now, we're not actually in a Bitcoin-dominated market environment. We're in an Ethereum-dominated market environment. Ethereum's outperforming Bitcoin by about 3x right now. Altcoins are only just starting to outperform Bitcoin. They're not quite there yet. It really is just an Ethereum-dominated market environment. Hopefully, eventually, that money trickles down into altcoins, but it's not happening yet. Now, one of the biggest kind of concerns that I have about this cycle is that maybe what we see, and this is a bit pessimistic, but it's definitely possible, maybe what we see is Bitcoin, it sees a 4-year cycle top, it goes upwards until October, but maybe it just remains within this channel, right? Maybe it only tops out at 130,000, which is what we've discussed a few times before in the past. A few months ago, 130,000 was a level I brought up quite a lot, because that would line up with the 4-year cycle top date at the top of this channel. That would be quite disappointing because it means we miss out on another macro move for Bitcoin. And a macro move for Bitcoin, that money flows down into altcoins and Ethereum. So it would be disappointing, but it technically would be a valid 4-year cycle top. And it's something we do have to consider. We don't actually have to see another big macro move on Bitcoin for the 4-year cycle to work. We just have to see the top come in October, okay? Or somewhere around there. We realistically could see something like this with a pathetic little top there and then a crash. That could be something we see. It wouldn't be ideal. It's not my base case. I think we probably do see another macro move, but it's possible and it's worth considering. Either way, the 4-year cycle does say we go upwards more. Whether it be in a macro move or just a gradual incline, we probably are not at the top yet. And that will start to, that will only start to be doubted if we drop below something like 110, 109. Then we can start considering that a bear case is correct. But until then, we're in a strong position. No matter what the short term says, we're in a pretty strong position here for Bitcoin, altcoins, and especially for Ethereum. In fact, let me just clarify that. We're in a good position for Bitcoin and especially for Ethereum. Not quite actually for altcoins yet. Altcoins actually haven't seen the light of day yet at this point. But if you want more information on that, check out yesterday's video. Guys, thank you for watching. I really hope you enjoyed. Please leave a like, comment, subscribe. Check out my community group chat. It's free to join on Telegram if you're interested. And also check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.